Hi there. Are you a sole proprietor entrepreneur who's been wondering, is it time for you to incorporate your business? My name's Erin Denise, and I am the owner of Erin Denise Chartered Professional Accountant. Here at my firm, we specialize in supporting entrepreneurs and living the life you choose. And what does that mean? That means I want to help you step into the life that you envisioned for yourself when you threw your hat into that entrepreneur business owner ring. Um, Yes, today we're going to talk about should you incorporate? Is a very, very common question I get from my sole proprietor clients. That's my kitty cat coming into the room. It's a very common question I get from my sole proprietor clients, especially my new clients. That's often what drives people to reach out to a qualified CPA accountant like myself. And one of the first questions they take the opportunity to ask is, "Oh my gosh, Erin, I feel like I should have incorporated. Please help." And they already feel like they're behind the ball. Usually, the reason for that is the business has suddenly, more or less, suddenly started to make a lot of money, and as they're getting to the end of their year, they're thinking, "Holy shoots, I'm gonna have to pay a lot of tax to the CRA. I made so much money. My income increased, my expenses didn't increase quite as much. My net income is huge. I, I, I don't want to pay all this tax. What can I do now?" Um, my first question that I always ask is, do you have the money still? Did you keep it? Did you keep the extra money that you made? The reason that I'm asking that is because that's really important in the question of should you incorporate. Now, incorporation, what it generally gives is a tax deferral advantage. So that tax deferral advantage takes place while you hold the income inside the corporation. So if you're going to earn a bunch of money and you want to use that corporate money to invest back into your business, well, then you would be taking advantage of the lower corporate tax rates, because while the money stays in the corp, it receives the lower tax rate. Once you take the money out of the corp and put it into your bank account, your personal bank account, or you start spending it, on the hot tub or on the sauna or the trip to Mexico, then that's personal. And if at the end of the day your business earns all this money, but at the end of the day all that money ended up in your personal back pocket, incorporation may not be for you. The reason for that would be because the incorporation comes with a lot of extra fees. Not only to incorporate, there's fees in that, but also the year-over-year accounting and legal fees that will be your responsibility as a corporation. Those are much higher. So you really want to make sure that you are earning the extra money and keeping it in the business to warrant the incorporation. Now, what do I always tell my clients? If your sole proprietorship made a lot of money and you still have the money and you don't need to invest it in your business, if you're asking, should I incorporate because I don't want to pay all this tax, man? If that's your question, then I'll encourage you to consider, could I invest in RRSPs? What would that do? That would put money into your registered retirement savings plan, and it would be a deduction on your tax return. So you think when the CRA or when your accountant calculates your tax, you have the income from your sole proprietorship, and before the tax gets calculated, you have an opportunity to take some deductions. And an RRSP is a deduction. So let's say you made $100,000 in sole proprietorship income, and by God's grace, you had $50,000. You had a whole lot of RRSP room, and you invested $50,000 into RRSPs in that year. What's your net income for taxable purposes? That's $50,000, because it's income less deduction gives you taxable income amount. So the negative of this option is you don't have the money to invest in your business, and you don't have the money to buy the jacuzzi. But you do have the money, and you are earning income on it, and it'll be yours for later. You save it for retirement. Isn't that lovely? So yeah, this is it's a common question I get asked, and I love to give this answer because I find most often people haven't considered investing in RRSPs, and it's the most logical, obvious answer. Of course, that's if you still have the extra income that you earned, and you don't need it or want it to invest it in your business. However, that being said, if you made a bunch of money as a sole proprietorship and you didn't incorporate, you're going to have to pay the tax to CRA anyway. So RRSPs are still a great option. So a reminder, you have until this is a leap year this year, so February 29th this year, to invest in RRSPs for the prior tax year. So you have until February 29th, 2024 to invest in RRSPs for the 2023 tax year. And if you'd like to learn more about how this works, perhaps you'd like a personal tax estimate. I love making personal tax estimates for my clients before they invest in RRSPs, so you don't have any surprises. So you know how much, if I invest this much in RRSPs, what's that going to save me on my taxes, Erin? I love to calculate that for you. I'd be so happy to calculate that for you, or to help you find that optimized RRSP investment amount. So if that sounds exciting or intriguing to you, I'll invite you to visit my website, www.selfaccountant.ca, and book your discovery call with me today. It's completely free, no charge to you, and no risk either, no obligation. It's an opportunity for us to meet and find out if we'll be a great match to collaborate our talents together. So thank you so much for joining me on this video, and I hope to see you again soon. Bye.